Hi, I'm Mike Swanson. I'm still down in the Bahamas. It's November the 5th. It's the day after November the 4th, obviously, but that was a big election in the United States, and it was kind of interesting to come down here and visit with Dave because we were at a bar yesterday, and people were celebrating. You can look at the headline right here. It about sums it all up.
Obama victory.
And then you get the one from yesterday. That's the headline I really like.
This is the one we think is really interesting because it kind of discusses what's going on here. You know, obviously most Bahamians are descendants from Africa, and so it makes sense that, you know, because they had sorts of segregation down here in the 50s and 60s, and a lot of black Bahamians couldn't even get, you know, go into some hotels and establishments and etc. So it would make sense that obviously the majority of the population is rejoicing in an African American president. But I guess what me and Mike, because I'm a libertarian, I'll come out and say it, I'm very apolitical when it comes to the two major parties, and I don't think either or, in my opinion, you know, none of the above, I guess you would say. But the interesting thing is that the headline next to Obama being president is hotel industry faces its biggest problem since 1991, and of course tourism is the largest portion of the economy down here. And this is kind of what me and Mike have been discussing, that it doesn't matter really who's president right now. You just had the biggest credit bubble in the history of mankind blow up. You know, you just got out of probably the worst of the credit crunch, and obviously huge deficits are being run. They're talking about another $300 billion infrastructure, you know, rebuild, bailout package now. So the new president's going to have to deal with all these things. And I don't think it mattered if it was McCain or Obama. That's all my own personal opinion.
Yeah, no one can wave a magic wand and eliminate all these problems. One thing that I thought was real interesting, though, we watched the election some last night, and this morning we were looking at some clips of it. And when Obama had his, what's the word for it, his victory speech, I suppose, he was on this stage, and there was like 200,000 people, but he didn't really look that excited. You know, he was standing around giving his speech, but just the body language, he didn't seem excited. I know his grandmother died over the weekend, and she was supposed to be one of the biggest influences of his life, and I know that sucks. But I kind of got a feeling, too, it's like, I've heard these stories before, like professional athletes, they win the Super Bowl or the World Series, and they've dreamt about doing this all their life, and then when they do it, they've like accomplished all their goals, and they just sit there and don't know what to do now. So in a certain sense, I wouldn't be surprised if Obama kind of feels like that, because here's a guy that's really been driven to become the president, and he's achieved that, and now he's like, it's probably more fun to run for president and win than to actually be the president, and now he's going to be stuck with all these problems, you know, that he's going to walk into.
And I think one aspect that makes him unique is that he's not a career lifetime politician. He's been, you know, a senator for only a short while, and he's been a state senator, you know. So basically, he's only been a politician within that last 5 to 7 years. And what makes that unique is you look at guys like McCain, or you know, Bush, or you know, Clinton. Those guys are career politicians, and well, you know, maybe they aspired to be politics. I think everything Obama's done, this is my own personal opinion, has been so he can become president. You know,
sure.
Maybe Clinton decided, I want to be governor, and everything evolved with a lot of these other guys. For him, I think it's just like last 2 years as a senator, he's been campaigning for president. Right?
Yeah.
So I think, you know, he has had that kind of coming down from the top here. That, you know, he's now president. He's like, well, this is what I was aspiring to. What now? You know, it's almost a bit of a letdown when it happens. And these are all, you know, we're trying to play Dr. Phil here. But you know, these are all kind of like psychological like assessments rather than just looking at things economically or politically. My own personal opinion of the macro cycles, we just happen to be in a down cycle like happened in the 70s or what happened in the 90s in Japan. And like I said, here I'll give you my personal philosophy on it, and again, I'm not going to come down on either party. When you are in a cycle like this, you have to be willing to make a tough decision. Me and Mike were talking about this. One thing that launched this big boom of the 80s and 90s was basically in the early 80s, Reagan put his foot down, whether you liked or didn't like Reagan. But what he was willing to do is make a tough decision, and that was he basically gave Volcker the permission to raise rates to 15 to 20%. Because Reagan actually had a little bit of understanding of economics, and he knew that the U.S. economy cannot be prosperous with inflation. So he knew it wouldn't be good the first couple of years of his regime, but he just told Volcker, we got to do it because the only way we're going to have prosperity in the long term is to get rid of inflation. And then secondly, at that time in the 70s, unions were kind of running amok, and he fired all the air traffic controllers when they went on strike. Which actually, it was strange. It was a small move, but it was a hugely popular thing that he did at the time because he kind of put down, his foot with that. And so what I'm saying is what really what we're going to have to see from leaders in the future, and I'm not going to say Bush, Obama, McCain, or anybody is or isn't going to do this, but they have to make some tough decisions. And if you're going to start running these big deficits, at some time you're just going to have to put your foot down and have to realize something that you're going to have to get rid of to get the nation back into a balanced budget and back towards getting into real prosperity. Because remember, our last two economic booms in the 90s and then the early 2000s were based on bubbles. The technology and then the stock or real estate bubble.
Yeah, and I don't see what bubble they can make now that's going to make everything wonderful again. And that's the problem. Yeah,
if there's any bubble, it's going to be a commodities bubble, and that's going to be bad for people, not good for the economy. Right?
In fact, if you look at the market and what's going on now, we've had this horrible correction in September and October, and a lot of it had to do with this credit crisis and bank problems, and that LIBOR rate was skyrocketing and so forth. And it appears that at the moment that crisis might be over with. It might be completed.
Yeah.
It may not get any worse because the Fed's basically guaranteed all this interbank loaning. So, they've basically done enough stuff. They're not going to let any more banks
go under,
at least no large banks that will have any impact on anything. But, I think probably the market, we may have seen some sort of lower bottom and get a nice rally. But I think looking forward, that crisis might be over, but the economy, I don't see coming back and having a big boom for any time soon because the real estate bubble is not coming back. Real estate prices topped out, and you don't get bubbles, go down like this, then come back up, and the futures market's not projecting a bottom for real estate until the end of 2010, just about. So, that makes it look like the economy's going to be tough for a long time, and I think that can, make the stock market really tricky going forward. I don't expect any more crashes like we have. I just think it's going to be a rocky investment environment where you're going to have lots of ups and downs.
Yeah, I think you look at if you look at the two past major bubbles, you look at Japan or you look at the 30s, and that's what happened after the big busts. The States had a small recovery in the mid-30s, and Japan had a bunch of false starts and recoveries in the 90s, but nothing really got back on track for about 10 to 15 years afterwards. I'm not trying to be doom and gloom. I'm just being a realist, and this is what history. This is not philosophy. This is history. This is what history is telling you, right? So, and we've discussed this in the past, and guys like Jim Rogers have talked about this, and they didn't let the system really cleanse itself, even though we had a horrible correction. They didn't let enough firms go under. So, and usually the history when you do that, like Japan did in the early 90s, is that you're not just blowing yourself up like South Korea did in 1998, and then you come back with 10 years of prosperity. What happens is it takes 5 to 10 to 15 years to work through the system rather than, 2 years, a bad 2 years.
But even in those time periods, money can be made. It's really tough to make money just in a general mutual fund or trying to go long the general market all the time. You kind of have to pick out individual sectors that are bucking everything else. Yeah, that's like the Jim Rogers. He was working at George Soros, so we're partners together in hedge fund, and they made billions of dollars in the 70s by trading commodities. Then I got this Stan Weinstein book I always talk about, and it was written in the mid-'80s, and he's got a lot of charts in the 70s of all these stocks that went up a lot. Most of the ones he's got in there are casino stocks, and Atlantic City was being made and booming at that time. So, even if the rest of the economy is like it is now, basically, for a while, there's still going to be something that's going to do well. We just have to keep our eyes open for it.
Yeah. Another example that was after the bottom of the Depression in '32, the CRB index, was hitting well above its highs of the late 20s by the late 30s, early 40s, and that boom in commodities continued to 1951. So basically, again, like what happened because there was supply side destruction. When the Great Depression came and prices collapsed, no one can make money on weed or in a copper mine or something like that because the prices of those things collapsed. And basically, then they had to shut down their mines. And then that meant when the economy at least came back with some form of demand, there was no supply in the market. And actually, that's what I partly think is going to happen in commodities going forward here.
Would you have any more thoughts about the election? Because I know that's right now.
Well,
that's what everyone's thinking about.
I guess being down here, I think we all had a lot of fun with it. Like, we were at this Flamingos, it's a small Cuban bar downtown, and the waitress was like laughing away and asking my friends who they voted for, and they were kind of playing along with her. And then, last night, this little bar we were at, I know the owner. It's next to a little coffee shop where I kind of frequent, and he was dancing around, and because Obama was winning. So it was more like, for me, it was like being at a football game. It was more watching people and the entertainment factor more than anything.
Well, I think that's how most people take elections. It's like, they're real partisan, and they're going to want to support one candidate. If that candidate wins, they're going to get all excited, and if their candidate loses, they're going to get all upset and think it's the end of the world. But in reality, life goes on, and I don't really think, like you were saying, that either one is going to have this giant impact as far as it goes for the economy, the stock market. I mean, they do have some differences, but it's not enough to change everything.
You look at Obama, for example. If, say, you panicked and sold out near the bottom, and let's say the market bottoms this quarter, just facetiously, right? And it goes in like the 75, 76 bull market. It goes in a 1 or 2 year bull market. Well, even if he upped the capital gains tax, it's not really going to affect you because you have so many capital losses. You'll be able to write that forward. So it's kind of like, I think if the market goes up, it's going to go up because you're in the natural, say, a small recovery of the economic cycle and whatnot, right? Not because of either candidate's policies. And like I said, the only way I think political policies really have an effect, in my opinion, is when you're willing to make tough decisions. And in the mid-'70s, all our politicians, Ford, Carter, either party, weren't. Right? They wanted to print money.
Right.
They wanted to keep the system afloat. And then Reagan was. So I'm just looking at, if we were in a bad situation, we need and the question is, will, for example, Obama be willing to do that? And, I'll leave that up to you.
Well, historically, I mean, it's rare where a president makes big changes. A lot of times the policies of the guy that came before him really sets the stage.
Yeah.
And even if you take Jimmy Carter, most people think he was a bad president and messed up, and the economy was bad, but really, under Gerald Ford, inflation was big.
Yeah.
And then real inflationary trend that came, blew up with Carter really started Lyndon Johnson in the Vietnam
Lyndon
War.
Johnson created it all.
So, and here we can look back, and really my belief is the problems in the economy now stem from all these bailouts been going on since 1987 and Alan Greenspan. It's really him doing all this stuff and all the presidents going along with it, and no one ever going against it.
You had the S&L crisis, and then remember you had a Mexican peso crisis, and then you had LTCM, and then you had their
That's on and on
because of Y2K. So what happened is you kept delaying the inevitable, that you needed a bad recession to cleanse the system, and then no one let it happen. So it led it to this, where we had these bubbles just get totally out of control. Because what's really interesting, again, it's mostly bad monetary policy. Like in Bill Fleckenstein's book, The Greenspan Bubbles, he discusses this. He says that basically the guys in the 50s and 60s who ran the Fed, their feeling was, especially in the 50s, you have to you're at a party, right? And if you spike the punch bowl, 90% of the people at the party are just going to have a couple of drinks, but 10% are going to go crazy, get way too drunk, out of line, and ruin the party for everyone. So that was the whole thing, that you have to take away the punch bowl from everyone at the party. And Greenspan kept spiking it.
Right.
And that's why you kept getting these bigger and bigger bubbles. Like, I hate to blame one person, there's so many people at fault.
Oh, sure it is.
But he's at the top of the list.
Sure.
For sure.
I mean, you could take, go on and on, the different presidents, the media, and so forth. One thing I'd like to see now, I'm not saying this is going to happen, this is what I'd like to see happen, is, since Obama's the president, but if it was McCain, I'd like to see him do this, that whoever became president, they get inaugurated like January the 30th, I'd like to see them, or I guess I'd like to see Obama get on TV once he's president, give an address to the nation, and just explain exactly what caused all this. And not just, say what you said, and not just do like what Bush did and say, look, we need another bailout. If we don't pass the bailout, it's going to be a Great Depression. You need someone to actually explain what caused all this and make it so people can understand it.
This is
and
my
no one
problem,
does that.
and this is the only guy who talks like that, and I'll show my bias here, is Ron Paul. He talks about the credit cycles, he talks about the Fed creating money out of the Fed hair, blah, blah, blah. like what will like Obama will get up there and say, and again, I'm not getting partisan here, but this is what they both do on both sides. They'll say these are the failed policies of the last 8 years. No, these are failed policies.
It's all Bush's fault
for the last 20 years.
He
The
says it's all
dot-com
Bush.
bubble
That's right.
happened,
That's right.
you know, under a Democrat. So it's like it's both. Everyone's at fault here, and these are the problems that our society got too built up on credit. I saw Michael Bloomberg have a great quote. He said, "One of the problems we have to all take fault in this is that in the old days, you would save your money, you would work hard for that down payment on a house, and now in this last cycle, everyone just wanted it right away without the work involved, and that's not what a true capital system is supposed to be about. That's a credit system."
Yeah, and I'll leave with one thought. I mean, to follow up what you said, people kind of wanted a free lunch, and they expected easy money, and nothing's easy, and the stock market's not easy, and it just shows you we're going to have to work at that, and if we're going to make money, we're going to have to pick out the right stuff. So,
no more ninja loans. Ninja loans were no income, no job.
So I guess we'll leave you with these thoughts, and we'll talk to you soon.
See you later.